Sup traders, it's May 15, coming through the year quick. My last video that I posted on the charts, I had a high time frame thesis for lower on Bitcoin, and we saw it. I didn't manage my trades well, so I didn't really profit from it. I profited from longs off the bottom. That's cool. But before we look at charts, there's a couple things I want to discuss. So the first thing is I'm I think I placed one trade with real money in May 1st, but my intention is to not trade with real money possibly ever again, and just trade with prop money. And I find this to be dog toy going off is what that is. Trading with prop money is significantly less stressful, and I believe is also has asymmetrical risk reward to the upside. The reason it's less stressful is because to me, the number one stressor in trading is the possibility of losing money today. I put on a trade, I could lose money today, right? With prop trading, that's not how it works. So the way I see prop trading is I pay an event fee. I pay $1,000 to get a $200,000 challenge, which could earn me a $100,000 account. I may make that $1,000 back, but to me, it's gone. That's a fee that I'm paying. It's gone. Every single trade that I make is demo money. I know this. It's not real money. And if I lose an individual trade, I don't lose real money. If I blow up a challenge, I do lose real money. I lose that entry fee that I already accept is gone, but it takes, typically I'm risking 1 to 2% per trade. It takes a long time to blow up a challenge. I've traded some challenges quite poorly. 2 weeks in, they're not blown up. They're only halfway there. So it takes a lot of the stress out of losing, and I'm happy with how the month has gone. I haven't necessarily done great, but I haven't lost any real money aside from that first small trade. And I have these challenges going. So, for instance, there was a moment where I had like $20,000 in risk. I have five challenges that I'm trading right now, one phase two and four phase ones. I had $20,000 in risk. It didn't bother me, didn't affect my sleep, didn't affect my trading because it's not real money. It doesn't feel like real money, right? Where if I had $20,000 of risk of real money, it'd be insane. If it's so much of my capital, right now. So my goal is to I'm gonna lose some of these challenges. I'm gonna time out some. I might blow up some. I'm gonna pass a percentage of them. My goal is to stack as many as I can through the year. One of the intermediary goals is to have 500 accounts. If I have 500 accounts and I see an A1 setup, I probably wouldn't do this all at once, but it wouldn't be unreasonable for me to risk 4 times 5, $20,000 on a trade. If I lose, nothing bad happens. I don't lose money. I don't even lose the account, right? It takes a series of losses. It takes a sample of losses, right? The trading prop is how trading is meant to be, is you think in a sample size because the individual trades don't matter. The individual trades don't make you money. The individual trades don't lose you money. It changes a little bit once you're funded, but it's still not real money, right? So, um, yeah, I can, by the end of this year, I want to have at least 5 200K accounts, and I'm just going to keep stacking them. And say I risk 20,000, I catch a 3R, I have a $60,000 trade. That's not out of the realm of possibility. It's not unreasonable, it's not unlikely. I'm going to withdraw that $60,000. What am I going to do with that money? Put it in savings interest rate. I'm not going to risk that. I'm going to buy more challenges. I might take 5 of that 60 and try to do 5 more challenges at the same time with different accounts. But right, I don't necessarily see a reason if this works to risk real money. I don't care if it's I also don't care if it's a 20% profit split where I only make 80% of what I make because it's all a free roll. 80% of what? 80% of a free roll, right? I consider it all a free roll. So this is what I'm focused on as far as my where we are. So to update them, these are when I started. I'm in one phase two, which these three I'm on a 5% drawdown roughly on each of them. The phase two, I'm definitely playing to win because I get 60 days. These ones I have a little more than 2 weeks left, so I'm still playing to win. But if we go another week and I haven't made a lot of progress, then I'll be playing for a free retry. These two I just started the round break even. I'm playing to win on them. Since I started tracking, I did have a couple failed challenges earlier, but since I've started taking it more seriously, I have 50% pass rate, which is not countering the free retry. Take three, free retry, one fail, one pass. We'll see how that continues. Now, as far as my trades, as much as possible, I'm trying to go back to the setups that I was doing last year. Because if we look at my monthly breakdown, September, October, November, December, this is my profitable period. I made a lot of money. January, February, March, April, very unprofitable. I traded different setups during these times. Um, I mean, my edge was as high as November, 43% win rate with a 6 RR. It was crazy. But even December, with only a 25% win rate, with a 4.5 RR, was still quite profitable for me. So, yeah, I just want to go back to the same setups that I was doing, which are all three of them. The the technical tools I'm using primarily only daily highs and lows and 1 hour fair value gaps. But really what the focus is trying to have a transactional advantage on each trade. What I mean by having a transactional advantage is when I'm setting a limit order, and on the other side of the limit order is a forced buyer or forced seller who's forced to sell from a because their stop loss is being hit. That's a transactional advantage, where they're forced to sell at a discount or forced to buy at a premium. And if I'm on the other side of that, in theory, I don't need to know the price. I don't need to know the chart. That's probably going to work out for me. I might get stopped out. It might overrun me, but over the long enough time frame, it's going to be profitable, especially if I hold until I have another transactional advantage where I'm able to exit with limit orders onto people's stops. People are getting stopped again into me. So um, here, like can predict where price goes, but I don't have to, right? I can say that there's a lot of liquidations that are occurring here. Probably that's going to be a major pivot, and oftentimes that does work as predictive, but it doesn't need to be predictive because there's an inherent transactional advantage of there's a lot of forced sellers. I'm a buyer here. There's a lot of forced buyers. I'm a seller here. If I get to unload again on forced buyers, forced sellers, then it's going to be a winning trade, regardless of what the charts are. Obviously, I do need to look at the charts to find these areas, but that's the game plan. Now, if I'm just market entering, I am. If I market enter, I might be able to market exit. I might be able to limit exit with a transactional advantage, but I don't have a transactional advantage entering the trade. So I might be it doesn't start off in the best foot, right? And there's more chance of drawdown or being liquidity, so on. So I'm trying to move away from market entering as much as possible. I'm still doing it here and there, but I'm focusing on trying to have a transactional advantage. Um, and I think it's even more important for my entries than for my exits. But ideally, a perfect trade has a transactional advantage on both sides. Whereas if I'm just market entering, I'm trying to at this point predict where the price is going, and I haven't found to have that much edge on that. A lot can go wrong too. The last thing I want to mention, an update that's going well, is I have these time lock devices. This is a digital timer. I've got a bin I put my computer in when I'm done trading. Same here, which saves me from staring at the chart for too long, and staring at the chart for too long can result in overtrading. Um, or a lot of the times it impairs my sleep, and then that causes me other problems or causes me to trade poorly or have a poor life. So those are working. There's times where I can just put the computer away, and that's great. Now let's go ahead and look at the charts. and see what we see. Okay, so um, I didn't necessarily handle this great, but I did get I did get into this trade with the transactional advantage at the bottom of this 1 hour fair value gap, saying, hey, if this price comes under here and under here, I entered right at 1750 actually. Maybe that was a 4 hour. I'm not sure why it was 1750, but I got right in at 1750. Price went at low at 1736, and then I exited after failing to get out here. There was a sweep. It didn't really sweep as high as I would have liked to. I ended up exiting in here. Really didn't play it right, but I did claim a profit on this trade across 3 different accounts, so that's good. And considering price didn't really move that far from my entry, um, yeah, it wasn't great. I think actually 1752 to 1811 was what a lot of them were. 1752 to 1811, which in theory was greater than. It ended up being around 1R, even though I don't know why, 2.75%. I think because a lot of them, I paid a fee and I paid this carry fee, right? But I don't know. I sort of bungled it. I think, or maybe I didn't risk as much as I thought I did. But it went as high as about across my accounts about 5,000 profit, and I exited around 3,000, which it's not ideal. So part of the reason that I exited was simply because I saw what I felt is like a really good entry, and I want to open up my capital for that. So um, that's what I did. We'll see if it works out or not. Again, I think from my own experience of now, well, it doesn't really matter because I kind of exited roughly where it was. But once price is doing this and sweeps here and here, we could probably expect somewhat of a pullback, somewhat lower. So far, that's what we got. Um, Now, in addition, I also had a Bitcoin long where the Bitcoin long was, well, I made, um, I was in profit, so I added on more risk, added on more risk at 26,900. And it didn't go super far in my favor, really. I mean, it went about, I wasn't going to have a limit here. My stop was about, I think, 2.5 or 2%. Yeah, 2.5. So I ended up getting stopped out around break even or for a small profit, but this one, it would have been nice when the day ended like this to just get out up here where I could have gotten um, a little bit more. Anyway, so part of the reason that I exited is because I see what to me looks like a great possible entry. Obviously, it can lose, anything can lose, but here is an area where we have the daily low from Sunday and the daily low from Saturday. Both of these days, price consolidated in here. We didn't take the Saturday low, we didn't take the Sunday low. Now we have a Monday low, we have a nice ladder. It's not so much liquidity that it would necessarily force us to lower prices, but it is enough that there would be forced selling, and entering here would for sure have a transactional advantage. And that's something that I'm interested in doing. Now, from a higher time frame perspective, um, price coming down into here caused a lot of forced selling, and this big wick, it I'm not convinced that we need to necessarily take it. We might. Um, Entering in here on this wick where there was forced selling could have worked great, obviously. Um, I didn't because I entered on the ETH wick and I got a good entry on that. So I'm happy about that. I entered near the bottom. I got 1750 entry and I exited up here. And I think it would be reasonable to just run that trade at break even. However, I see what's possibly a great entry and I want to try for it. It might not work, but um, yeah. So, part of what I'm seeing on the monthly time frame, which is my favorite chart for liquidations, is we hit the major level at 26,400, cut under it, and the next major level is 30,300, which is above these highs up here. I'm long biased up till there. It doesn't mean I'm just gonna sit in longs necessarily the whole time. I still ideally want a transactional advantage to get in. Um, and I am um, that said, like I'm not necessarily that interested in selling there, even though there's forced buying because there's so much liquidity. I kind of want to see it all cleared. Like for me to feel safe, this would be a good place for me to sell between 32,700 and 33,680, something like that. That's where I would be very interested in selling. I would be interested in possibly selling a sweep of this high at 31,000, maybe if price just doesn't make it that far. But um, like there's a lot of liquidity all the way up. And if we look at to the left of the current high, there's also this region, which I don't think it really matters that much. Like who's still holding short for a year? No, hardly anyone. So I don't think this matters too much in terms of liquidations. It matters for targets. Like people have targets here of they think people might want to sell here, but especially people have targets of they if you have a long from here, this is a good place to TP. The high is also a good place to TP. There's three possible TPs, but above this TP and here would be to me would be a lot safer area to short. Um, if we break down, those longs are a lot more attractive to me because there's a lot more areas like open areas where okay under here could make good long. I mean price could move fast on liquidations to the downside, but um, yeah, it's okay. So on a 7 day, the 7 day, we're seeing the biggest liquidations are to the upside at 27,850 up to maybe 28,400, which would be, let's go back to a lower time frame. 28,400 is above this right here, above Wednesday's wick high that we should come up here and on a 7 day, like I'm not interested in shorting in here because if we come up here, the odds of taking this high are quite high. So I don't know how I would get in exactly, but I would possibly be interested in participating in longs as we move higher. I did exit obviously because I see this great setup that I think price might want to revisit, and I didn't. Yeah, maybe I should have continued to sit in my ETH longs and instead used side capital for that. But I don't know. We'll see how it plays out. There's a similar setup in ETH where this seems like a fine place to enter if we get it. So 26,400. Okay, let me put my stop right at 26,400, where if we take these lows, it's not so much liquidity that it's going to send price flying, but it's enough to give me a transactional advantage to enter. And then price can move up from here and take out these higher time frame targets up to here. So that's the trade idea, is that I'm going to have a transactional advantage to enter here and a transactional advantage to exit here as well. Up to 30,800 kind of makes sense. So I'm going to look at one possible problem for this. Yeah, right here, 30,300. So on a higher time frame, like the 3 month and the 6 month, there's a lot of liquidity down below. This is something to pay attention to. I don't find the 3 month chart and the 6 month chart to be necessarily as useful as the 1 month chart. Leverage traders don't tend to hold their positions for 3 to 6 months. Spot traders do, and spot traders are less vulnerable to liquidations. So I think that this just isn't necessarily that accurate. After all, it's an estimation. Like, we look at the 1 year, and there's a lot of liquidations at 15,200. I call bullshit. A lot of people bought down here, and a lot of people might choose to sell down here, but who's really forced to sell down here? That their liquidation is 15,200. And they have no stop loss in between here and there. It's an estimate. So when I look at these higher time frames, 3 and 6 months, they don't always work that well. A lot of these people already claimed profits, people who went long. Now, I'm sure there's liquidations under here, but I'm skeptical as it's as much as it says. Now, even if there is, we've put in a decent distance between here and there, and there's also quite a lot above the highs too. So I think it's reasonable to aim for that. Okay, now something I do want to point out as far as the price action is, to me, I sense that the market is changing, and it's maybe changing back more to what it was um, closer to in the last year. So what I mean is, January 1st started with this insane rally. We had a pullback and a great rally to new highs, and then we had a pullback, and then a huge rally to new highs. No pullback, rally to new highs, and then we had a pullback with rally to a lower low, and then a nice pullback. And it's been 4 days, and price hasn't really, like, we had a rejection here. Tomorrow could be an insane rally, it's possible. But on these other pullbacks, we rocketed off the bottom. That's not what is happening here. This one should have possibly given us new highs. This one hasn't. So that makes me think, okay, maybe it's getting more balance between buyers and sellers at these levels. And part of this is also, like, these rallies have offered no, aside from maybe there's one pullback initially, and there's one sweep where you could get in. And then after that, it just trends insanely hard, and there's no pullbacks to get in until the move's done. So um, part of the way that's for me is it was harder to trade because I don't like chasing price. It kind of forces you to chase price a little bit on these rallies. Using breakout trades worked quite well. Um, Locally recently, since mid-April, even since, yeah, early April, breakouts haven't really worked great. They haven't been sustainable. They haven't really brought us to new highs. So that's a little bit of a warning sign for possible downside. And yeah, something to pay attention to. Now, obviously, I'm trying to long here, but what's different is here and here, I think you just buy and you set breakout longs. Where here, I'm not as interested in breakout longs. We didn't get a retracement, but I think there's not only possibly an increased likelihood that we fail, but getting filled here is a lot more likely. Like, it's earlier in the year, I wouldn't necessarily expect this, but the odds of getting a pullback into this area, I think, are um, pretty good. So, yeah, I chose to do that. My stops on ETH weren't in danger at all. Obviously, I closed it at 1 hour profit, but this is, yeah, this is my idea. But you can also see like already this local breakout pretty much failed and came back to lower than whatever the breakout was. So, yeah, I'm just think we're at a place where we can probably focus on retracements more. So, I like that setup, right? Now, if this setup fails, I'm interested in um, on the 3 month clearing out this. So there's a hot spot down to about 25,200. So if this would be a loss, I'm interested in just limit ordering right around 25,000 with a stop loss around maybe 24,300, something like that. With the idea that, okay, I'm going to buy these liquidations and then my stop's under. Even if we use the 3 month, there's two hot spots. There's one at 25 and there's one at 22. And they don't, I don't see why they should connect. And I can trade one at a time. So, yeah, if price breaks down, I should maybe just set these now as well. I think maybe I will. It's a little bit of work to do so, but so there's a daily gap, there's a 1 hour gap, there's a 4 hour gap. This is where I would try if that failed, and then depending on candlesticks, maybe there's another way to get in. Again, I'm not like I find it all pretty hard to short when it's so congested. I would like to see it clean this high and fall under, and then give me a retracement entry. I don't see myself doing a predictive sweep anywhere below about 33,000. So that's sort of hard to trade. ETH is a little bit. I'm less interested in the 1 hour because on a lot of them, this candle took a lot of liquidity from these 2 days and left a lot behind, where Bitcoin didn't do that. So it's a little bit just not as good. And then also down below, there's a lot less open space, or Bitcoin has like a lot of gaps in open space. ETH just looks, it's just traded a lot different, it's somewhat different. So that is my plan for now. My thesis is for yeah, we get a nice rally. Maybe I don't participate. I mean, it's definitely possible that I kind of get fucked a little bit. Yeah, my stop was in the wrong place. I think it was 20,000. It's like right in here. Maybe right here was my stop. Like 26,950, something like that. My entrance was at 26,900. Yeah, I had it in profit. I think it was maybe 27,000 was my stop. Something like that. Okay, let's look at indices. I mean, they're just ranging. Like, it's hard to really pick a direction. This is the daily chart. When we never hit this major target, we're in quite a tight range. I don't see a reason to call a direction necessarily. Like, Nasdaq's just climbing higher. I call higher for that in that case. The dollar is possibly staging a rally, so that's something to pay attention to. But it also could just be a liquidity grab before going lower. Not really clear. So I'm just trading where I think I have a transactional advantage, which is on Bitcoin. Okay, and then I'm gonna put in orders for a lower, and then yeah, and this is how I traded last year, and I did well. Have my limit orders, let it happen, and then after that, depending on, I guess, after that, the next area of interest would be right around 22,000, which would be right around maybe 21.5 is what I'm looking at. That's sort of hard to predict though. Maybe, yeah. And then it's a little bit harder to do, but yeah. 18, 14, 90 times 2. So locally, we swept this high and then we pulled back. I don't necessarily see a reason for that to be the bottom. It could be of this local move. Um, the volume on it was slightly elevated, but not super high. And all we did is we pulled back. I don't think we took like major liquidity. Obviously, there's traders like me who advanced their stops that got stopped out, but we didn't put people underwater. And um, it seems more likely we do that before I move up. Obviously, we don't have to, but that's part of what I'm paying attention to is likely. So yeah, 22,000 would be interesting on Bitcoin, which would be right around maybe this square on the 4 hour. Yeah, maybe like 21.6, yeah. So if we lose this, I could maybe see longing around 24, just depending on what price action does, but I'm less interested in a predictive sweep there because of how liquidity looks. But 25 looks good to me. So let's, okay, I'm gonna log off. I'll upload this for you guys. Much love. Peace.